So good afternoon, everyone. Welcome to the NTW 2025 Sustainable Finance in Action, Shaping the Banking Future class. I'm happy to welcome you all today. We're excited to have you join us for this insightful session. I would now like to introduce our trainer, Mr. Harun Anwar, who will be leading today's class. Mr. Harun, over to you.
Thank you so much, and welcome everyone. I really appreciate you taking out your precious time to get a peek into this fascinating topic about sustainable finance. The intent of our session today, as I will walk you all through this presentation, is to give you an insight into what's happening. This is a short 90-minute session, so assuming most of you have little or no background in this area, I'll start it as a beginner's discussion, then go into the impact that sustainable finance will have. And towards the end, I'll leave sufficient time for you to ask questions. I trust that would be an acceptable way to move forward. Okay, so very quickly, let me then share my presentation. And if there's a challenge in viewing it, please do let me know.
Sure, sir.
So is this okay? People can see it, or you can see it?
Yes, sir.
All right, let me then try and make it move forward. You see the heading now?
Introduction to
All right.
sustain. Yes, sir. It's
All right.
moving, sir.
Okay. Awesome. So we have about 30 odd slides to cover in 90 minutes, but it's not about the slides. It's about what I will share with you. And the slides are merely meant to act as a guide for all of us to stay on track on what I'm going to be speaking to you about. Now, personally, I'm very excited about this because I have been a banker for over 30 odd years across the world, and I find this strategic imperative that is driving us in this direction quite impactful on how the banking would look like in the years to come. And it all falls down to a basic principle, which is called values-based initiative. What drives us to do something, and there is something behind that that goes beyond monetary consideration. And that aspect is our values. So let me dive right into it. So in our agenda today, as the screen would show, we'll cover these topics. And in these 8 modules or sections, we'll touch upon different aspects, giving you a fairly good sense of what the topic is all about. And if you are keen and interested, certainly there will be opportunity to dive deeper into a full session, which would be a much longer session. Okay, so in 90 minutes, what do you get out of it? You'll get an understanding of global imperative behind sustainability. What is sustainability? Why is everyone talking about it? And how does sustainable finance actually help us achieve that objective? And with that, let's look into what is sustainability and why does it matter? Some of us who are familiar with the concepts of environmental, social, and governance, ESG, or sustainability, or climate change, are beginning to realize that as the world expands, grows, produces more, it needs some kind of fuel to generate and power all our production and manufacturing. So the scientists made a realization that the more fossil fuel we use and the more we produce, especially in large manufacturing countries and the likes of China and Malaysia and other places, we tend to generate gases which affect the overall temperature of the planet. And when the overall temperature of the planet changes, it impacts the entire ecosystem around us. Our plants, our seas, the marine life, and it's not sustainable because over time, if the temperatures change, it impacts the ecosystem. which means how the plants grow, how the insects exist, how some fish are able to produce eggs, etc. Everything is impacted. And that's why it started to become an important topic of discussion, led primarily by EU. All right, so there was this objective which came down to discussion on how do we deal with situation. And if we go about implementing all of this, then is there a cost attached to it? And if there's a cost attached to it, to go from fossil fuel type industrial production to some renewable energy type production, who's going to bear that cost? Is it something that individuals like consumers really want? And what is the role that financial institutions and the governments can play in making it happen? So as I mentioned earlier, European Union has been at the vanguard of making this change happen. So they created a taxonomy to show what's a responsible way of producing or manufacturing goods, which was translated into EU taxonomy, and they created different regulatory bodies, which we will talk about, like TCFD and SFDR, etc. And again, the measurement of how companies are implementing those principles behind that. For sustainable finance, we will look into how financing of those elements help achieve those sustainability objectives. So your question is, okay, so money is money, but now the question is, if we want to change behaviors of people, how do we encourage people to use the right actions and right behaviors if we give them incentives? And there are only two ways to give incentives. Either you tax people, or you, in other ways, some way or the other, punish them to quit what they're doing, or you incentivize them or motivate them to do that. And finance is a very good motivator. So we came up with this concept of sustainable finance, where the companies get funding, financing on favorable terms, better pricing, to allow people to be able to implement ESG considerations. Now, ESG, as the word here again says, it's environmental, social, and governance, which broadly defines how value-based decisions are made by organizations. So as I was alluding to earlier, this effort translates into two forms. One is that decision-making starts to improve on how we measure the actions we do and the financing we need to do that. And financing comes in two forms for companies. Either they take loans from banks, or their bonds that they issue, or the investments made into their equities, etc. They come to these companies. So now it became crucial for a lot of companies to access that market of financing, whether through capital markets or through commercial banks, to be labeled that the way this organization is pursuing is eligible to access that kind of financing. So in my slide, I've mentioned there are financial products termed as green bonds, climate-linked loans, ESG-themed ETFs, etc., to bring this theme into the aspect of the products we use as consumers and as businesses. Now, let's get deeper into Malaysia's role. Now, Malaysia has been at the forefront of embracing this regulation, and fortunately for us, we have very supportive regulators who want Malaysia to be on the path to achieve what's popularly known as net zero 2050. Now, the question is, what is net zero 2050? Well, this is a notional ambition or pledge set by all the countries that came together and made this commitment, and we'll talk a little bit more about it down in the presentation, that they want to bring the temperature levels back to 1.5 to 2 degrees of pre-industrial era. And the objective is driven by the ambition that it can be achieved by following more renewable energy practices and less dependence on fossil fuel. Okay? So to encourage that, Malaysia brought in some policy frameworks, sustainable banking strategies. We'll look at some case studies and how we are able to achieve that on our plan to get to net zero. In terms of what happened, there was this view, 70s and 80s, about what's ethical investing. A part of ethical investing, some of you may know, happens in Malaysia and some other countries. Is called Sharia-based. So Sharia is value-based investing or value-based principles, where individuals look at things beyond merely interest rate returns. And the pricing is dependent on how we view our values to overlay on top of the actual returns we get. But as the timeline shows, there were agreements made in 2015 and then with action plans in 2018, which led to this commitment called Glasgow Financial Alliance to achieve net zero. And this is where developed countries got together and they made a commitment to help developing countries, largely the countries which were in manufacturing using fossil fuel, to be able to transition from fossil fuel economy to a more renewable energy driven economy. And in the renewable energy space, we are looking at solar power, which is a dominant one, some of you may have heard, but it could also include wind power, geothermal power, so hydropower, and to some level questionable nuclear power. But the main ambition is that when we use fossil fuel, it generates gases which go up in the atmosphere, pushing up the rise of the temperature. To stay on this commitment, you may have heard of a term called COP. It's a conference of parties, and it is regularly held annually to track the commitments made under Paris Accord and see how we are progressing towards that achievement. So we would hold this COP 21, 22, 23, and it continues, and it's held in a different country every single year. In context of Malaysia, again, let's look at where our journey started. And in Malaysia, we started value-based investments and considering ethical investing through Islamic finance. We launched some sukuks. And then now recently, we have started focusing more specifically on green sukuks as well as climate risk management guidelines published by Bank Negara. Now, as I was mentioning earlier, the motivation or driver behind all of this is the commitment of countries that want to bring the temperatures, global temperatures, down back to a level that encourages flourishing of the ecosystem in which we live, the planet in which we live. And if this is not addressed, there is a high risk that it will impact the climate. As we talk about, glaciers might melt more than they should, though sea levels may rise more than they should. Major cities may start to sink. Natural cycle of production of plants may get disrupted. So those are the primary drivers behind this. So this builds on what I was sharing with you. The whole initiative of going sustainable and green is to encourage capital to go towards innovation, green innovation, and I'll very quickly mention some examples to you. So we want the green power. Green power is, okay, how do we save electricity? How do we use solar power to generate it? So the more efficiently we manage, the better results we will get in controlling temperature. You may have also seen electric appliances now with labels on how energy efficient those appliances are. You may have seen buildings with labels that say, well, this building has been certified to be a green building, because it all boils down to all the practices that industry or that building is undertaking to make sure we are environment friendly, and that will eventually have an impact on how we view uh, the financing to support that. So steering capital away from high emission activities, again, as I was saying, incentivizing or penalizing. Corporate climate accountability, just an inclusive transition. Now, this is a very important part. The concept of just an inclusive transition. So when we say we should move away from fossil fuel would, an example would be carbon, okay? So we use coal, and coal is used to fuel power plants, etc. Now, if we transition away, does that impact communities that are in coal mining and the workers who are involved in that industry, etc.? So there is a whole intention that we want to go through this path of transition, making sure that all those stakeholders, individuals, and communities who are part of that journey do not get impacted significantly. Okay? And of course, the regulators, they may want to ensure that all the policies and regulations are incentivizing the companies to follow it. There is a lot of question marks, especially coming from the US, who find this to be very onerous on the industries as well as consumers. And we'll touch upon that topic on why the US views this differently than rest of the world. So coming back to the journey to net zero. Now, net zero, as I mentioned earlier, balances the greenhouse gas emissions with removal. What are greenhouse gases? The equivalent factor we use is carbon dioxide, but it could be any of the carbon-based gases, including the ones we use for refrigeration. There's an argument that says that our cows generate methane gas because of uh, how they release them, etc. So all of that falls into greenhouse gas emissions category. The roadmap to access, reduce, offset, and report is part of the process on reporting regulatory requirements. Which sectors are generally seen to be producing more greenhouse gases? As it would be fairly obvious, anything that relates to energy, fossil fuel providers, transport, because they use most of that, etc. And as I mentioned, including agriculture, because to produce food and produce agriculture, these areas are heavily impacted by the fuel we use to produce it. Okay, so now a question becomes, back to sustainable finance. How does money solve the problem? Well, money makes things happen. And if we make money more readily available, capital more readily accessible, funding, financing that encourage investments into projects or ventures that are green in labeling or definition, it will create an incentive for people to proceed in that direction. So what EU does, for example, they now require exporters from countries like Malaysia and others to label how the products have been produced, attach certifications, etc., that they comply to certain standards to make sure that they incentivize the right behaviors for the exporters to use right type of energy to produce those products. And this just builds on the previous conversation I just had, that the purpose of sustainable finance is to encourage and motivate corporations to move towards a low carbon economy. As we do this, this whole impact comes into reporting and building right economies and right communities. So there is a lot of discussion happening on how do we integrate all these principles of ESG into every investment decision. Now, where that translates into is the corporate authorities now mandating in Singapore, Malaysia, etc., to produce every year, along with their annual reports, uh, a report on sustainability, on what steps they are taking. So this is a whole journey. We start with saying, okay, today this company is in status X. This is the amount of carbon footprint that they have. And over the next 10 to 15 to 20 years, what steps they will take to reduce their carbon footprint. And in that journey, there are motivations, and they have to report that status as part of their annual reporting requirements to show how they are changing and delivering along the commitment that they have made to the investors and shareholders. And if enough investors and shareholders commit to that kind of initiative, then the money is directed in those kind of companies and organizations who are committing to producing those results. We're going to keep moving forward. All right, so now we get some very interesting terminology. And we have all heard of that. So I'll start with some basic ones that the United Nations started with. For example, Sustainable Development Goals, which are also known as SDGs. Similarly, PRIs, Principles for Responsible Investments. SRIs, Socially Responsible Investing. TCFD that you see here, Task Force on Climate-Related Financial Disclosures. Then we look at green finance, anything that relates to financing, or sustainable finance that relates to sustainable financing. We have terms like SFDR written here, Sustainable Finance Disclosure Regulation. And all of these are coming primarily from EU. So EU has regulated some things. There's another terminology which you may have come across called CSRD, which is Corporate Sustainability Reporting. So again, I want to highlight these things, that these are the global frameworks primarily driven by EU and accepted, embraced, implemented by many countries across the world, including Malaysia, to align themselves to these goals and to incentivize corporations to adopt them and report them. Now, what are the key pillars for sustainable banking? Now, we are looking at as I said, how does it shape banking? Well, the banking is all about taking funds and directing them towards the users of the funds. So there are companies who want to access these specially priced funds and to be able to achieve their objectives. And as part of that, they will produce reports or classify their ventures, which will enable them to access that money. There's a term sometimes used as greenwashing, where companies try to fake the data and try to access those funds by showing that they are following those principles. And there are bad players, but the good players that want to pursue renewable energy, uh, electric vehicles, which we have seen has gained popularity. So the government would probably reduce taxes for EVs, etc., as an incentive to achieve the net zero path. And the bankers direct the funds, loans, investments in that direction. So some of the banks, and I will show where HSBC made this commitment, Bank of America, these are all developed countries, but Tyros Bank is one of the most interesting ones you may not have heard about. It's a Dutch bank, retail, and they have completely transformed their model to encourage people to use sustainable financing into their day-to-day life. An example would be if you use the Grab app, just as an example. You may have noticed now they ask for donations towards carbon neutrality, because every time you use a vehicle, you are producing some carbon footprint, and by donating, you're able to offset that carbon footprint. Similarly, there are some credit cards out there which also encourage that. So all of these activities are principally driven behind this incentive to get sustainable finance as a driver or a motivator for people to change their behavior and adopt more green practices. So what is the impact of this? Uh, we may have to forego short-term profits to generate long-term value. Okay? And long-term value generation is not only value-based incentives, but it is also the value of your investments. So as more and more people adopt and embrace the fact that we want to live in a nicer place, a better planet, the bigger the impact of those investments will be, and there will be a higher level of motivation for people to move in that direction. Now, I want to just bring this important point because I hear a lot of people saying, hey, look, why are we penalizing consumers for an ambition of some policymaker, bureaucrat, and regulator? And at this point, let me just highlight as a personal example to all of us. If we believe in good hygiene, okay, we want to make sure that anytime there is waste produced, so human beings, animals, pets, everyone, whoever consumes something will produce waste. That's the part of nature. And the manufacturing is no different. When we produce something in manufacturing, we produce waste. But in that process, if that waste that we produce impacts the environment and we let it happen year over year, our planet and our environment will suffer in a way that we can no longer take it back to where it was. So if we keep that principle in mind, that there is a uh, behavior, there is a responsibility on each one of us to understand the dynamics behind it and embrace those principles, then all the organizations who are committing to this will gain value because we will say, I will deal with this organization because they embrace these green principles. They follow, they're good for planet, they're good actors. Whereas other entities who don't follow these principles, who are bad actors, will no longer be our favorite entities to invest in because they're polluting the environment around us. What are the expected outcomes? That we will achieve carbon neutral portfolios by 2050, which is, again, the net zero ambition. The green capital will help us replace the fossil fuel investments. We will have stronger climate resilience in the markets, and the stakeholders will have stronger trust and brand value coming out of it. At this point, I want to also highlight this impact of carbon neutral portfolios, because this is where a lot of individuals question, okay, I want to achieve it. I want to be able to reach a certain level of reduction in carbon, but I cannot. I cannot get there because there's not enough technology available to be able to achieve that process. And even if I did do that, the product would not be of that same quality, etc. For example, we have seen EV cars, completely EV cars, but we have also seen hybrids. And the rationale behind that is that even though people have EV-driven cars, there are not enough power outlets to bring energy into those cars. And even if they do, they take longer, like 90 minutes to charge a car. And the person says, hey, it's too much time for me to wait for the battery to charge in a car when I really need to be on the go. So those are the factors where sometimes you are unable to reduce the desired target for carbon out footprint. And then you look at offsets. How can I offset this? So a company will then go and trade. So in Malaysia, we have created voluntary carbon markets where companies can go and trade, where from those companies which have carbon surplus to the ones which have carbon deficit, so to achieve the carbon neutrality. I talked about some of these challenges and criticism earlier. So greenwashing is a term where sometimes if there's lack of standardization, there will be misrepresentation of data. And misrepresentation of data would make things look more green than they really are, and mislead the investors and financing for those companies who want to have access to green capital. Uh, then the other question becomes of how do we standardize ESG data? How do we set up the right benchmarks? So everyone who's reporting that information is reporting it in consistency. Let me highlight a key point here. So there are many standards that have come about and they're evolving. IFRS, which is the accounting standards internationally accepted, they have created, as part of this sustainability effort, standardized way of reporting data. And a lot of companies are now moving in that direction and adopting some of the initial work done by EU into a more internationally recognized framework. Guarantor, how am I doing on time before? Hi, how am I doing on time? How am I doing on time? All right, I'll continue. I can't hear you, I think. All right. So the next one is how do we um, do this whole data? So artificial intelligence, big data is doing a major part in helping us complete ESG scoring and modeling. Blockchain is providing green bond traceability. Green bond traceability is green bond, sorry, is so when we produce something, let's say in a country, then along the way, all the way from the to the value chain, from where it was sourced, it could be, let's say, coffee beans, from where they are sourced, all the way to your supermarket when you use to consume it. This whole chain can be traced if there is a, a good blockchain-based system that ensures that the data cannot be changed or altered or anything. And so end consumer knows that we are producing, delivering everything in line with green principles. Okay? So this whole process of monitoring from the very source all the way to production, procurement, delivery, consumption is, is manageable and tracked with the help of technology. And the role the banks are playing in this just transition is providing financial access to all communities. So the emphasis on just, uh, and this is a key theme you will see keep coming up in the value-based investing and value-based financing, is not to have all this capital end up with the big entities, big companies, but also help SMEs the ability to access it, the emerging markets, the lesser developed countries and lesser developed economies to be able to access it. So that becomes a key component that while we go through this transition phase, the banks who are providing this kind of financing and investment, they do not in any way disintermediate and affect the groups which are impacted by this change and this transition. For Malaysia, it's been significant. Malaysia made a commitment to net zero by 2050. We have started different regulators emphasizing different ways of making this change happen. It is required now for us to produce reports every year and report our status of how we are changing our usage of carbon, fossil fuels, etc., and how we are progressing towards a more climate-friendly way of producing our stuff. So all of this is now factoring into certain sectors, palm oil being the most significant one. And based on these behaviors, there is a supply side, regulator impact, as well as consumer demand. And the investors and consumers are insisting that we follow processes and procedures that deliver uh, this principle-based finance, principle-based investing. And Malaysia is at the forefront right now. We see a lot of progress happening in Malaysia, not only because the regulator is insisting, but there is a complete change of how people view this change, and they are demanding this change to happen for a better future for themselves and their children. So in terms of the drivers, in Malaysia, we have Bank Negara. They have done a fair bit of work on encouraging companies to talk about climate-related disclosures. They brought out the taxonomy. Securities Commission of Malaysia has a socially responsible initiative roadmap. They've published that. There's an alignment with ASEAN's taxonomy for sustainable finance. And there is then again a committee formed on climate change. And all these committees are focusing on, as I keep using the word, either incentivizing companies to move in that direction or penalizing companies who don't. It sometimes even shows up at a supermarket for us when we are asked to pay a few pennies extra if we want to use a plastic bag. So it comes into our daily lives in many different shapes and forms as companies are pushed to adopt more climate-friendly principles. So how the banks are doing this in Malaysia, they have promoted green and sustainability-linked loans. They are encouraging better risk management policies. So every time a credit is underwritten or credit is approved, there is a whole disclosure and discussion on the risks the company is undertaking, on their processes and procedures undertaken, as well as the bankers incentivizing and lending to those companies who are motivated to adopt those principles. I'm going to pause here for a moment because I want to quickly check with the guarantor. Guarantor, how am I doing on time? I think she... All right, I will continue and we'll ask questions later. So let's look at some case studies. We have CIMB very publicly, openly committed to their achievement of net zero target, and they have launched multiple green financing products. Maybank has also committed to providing funding in this specific area for sustainable finance, and these two are dominant players in the market. So their level of commitment and seriousness is evident from this. But the most encouraging part is Bank Islam, which is based on value-based financing and value-based banking, but they are taking it a few notches higher. They're taking a few notches above where they're saying, okay, not only are we driven by that, but we are also embracing sustainable finance. And as part of that, they have launched multiple products, sukuks, the whole principle around that. So we are able to see that they are attracting those companies and those individuals which are keenly driven by principles around Islamic sustainable finance. Okay, so this is a very interesting combination to bring in both the sustainability values as well as other value-based, that no interest or other such factors, and brought them together as part of the commitment to achieve this objective. So with ASEAN in this sustainable finance innovation process, Malaysia has taken the lead. They are guiding, they are helping become a top leader in this. They are mobilizing capital for investments into low carbon transition programs. They're helping in assessments of ESG risks. And they're also supporting inclusion for growth and social equity. So we see all the banks actively engaging, actively spending money, promoting these good principles for the clients that they serve, both corporate, institutional, as well as retail to some degree. And the objective of this motivation is to help Malaysia overall achieve its net zero pledge that they have set out to do. And with all these activities, we anticipate that it will help us as a country access those funds which are made available by developed nations for green and ESG linked finance. And we will have a better climate risk disclosures by the entities, build a better resilient economy. uh, the Malaysian markets will demonstrate higher investor confidence, not only from local investors, but other institutional funds that are coming in from international sources as we progress towards the commitments for sustainable development goals and net zero. I'm going to pause here uh, because I'm really sorry, but I'm unable to see the time on the screen. And if that's okay with everyone, just give me 2 minutes pause here, please. Thank you. All right, I'm back. Thank you for giving me some time. I think we're good on time. I wanted to leave enough time for everyone. Okay, I have a question now. Climate change and principle-based taxonomy is used by FI Bank to access loan approval for green loan to a company. Or may I know how CCPT works? Very good question. All right. We will take this up towards the end if you're okay with it, CP. All right. But noted, it's a good question. So as we look into this, we talked about there is sometimes lack of this data to support the adoption by SMEs to move into green financing, because to achieve those ESG related data goals and to be able to demonstrate that they're following those principles, even for that, they need to spend money. And the SMEs, they lack the ability to do that adoption really well. Even if they wanted to, there is limited talent available in the market who has the right expertise to guide those companies to achieve that. And then at the end of the day, there's a there's a requirement that we don't have multiple standards. We have similar or same standards that help us achieve that. So let's think about this in how it impacts a company, okay, on this one. So let's assume I'm a multinational corporation and I'm in fast moving consumer goods. The likes of Nestle's, Unilever's, etc. They are called fast moving consumer goods. And now I have made a commitment. I'm a publicly listed company. I've made a commitment that I'm going to follow these principles, and I will publish my sustainability report. So as part of my sustainability report, the number one thing as a company I have to do is to define my boundaries. Okay, so boundaries can be defined by my subsidiaries, my physical boundaries, which plants, where are my offices, etc. All of those activities that I use to produce these goods are part of my boundary, as it's called. Now, why are these boundaries important? Because it standardizes the reporting on how I report. And when I report, I have to look at some areas which are, when I produce something, how much carbon do I use to produce that? The kind of coolants I use, the kind of machinery I use, anything that I directly use to produce that good generates some level of carbon. And that is something I have to track, report, monitor, and then eventually publish. And to make sure that goes right, I need people to help me do that. And there are standards, global standards like ISO 14064 for disclosure of your greenhouse gas emissions, etc., which need to be captured by the companies. Then, as I said, measured, captured, measured, monitored, and reported. Someone has to come in and audit that are they doing it correctly and consistently. So all those things are about talent gap and ESG expertise. And this data is what the company has to report. Now, in addition to that, there is a requirement to see what kind of energy do I use or energy I purchase to produce my goods. So if I'm using renewable energy, that's a solar energy, then I am using better energy versus if I'm using electricity produced by coal. So there is, again, a factor that's captured and reported in the equivalent carbon dioxide I produce based on the type of energy I use. Then the third level, or scope 3 as popularly known, is my supply chain. So when people, suppliers, and this is the case in some SMEs, they provide me material and goods, what kind of practices they follow in producing their goods. And if I'm using input material, which is using a huge amount of carbon, then it also impacts how I'm able to report my sustainability practices. So now do you see this whole thing is not only about the big corporation, but the entire supply chain where SMEs participate in producing this end product that we consume. Let's see. So in Malaysia, we are now bringing in different kind of technology to be able to measure, monitor, and report different companies' activities. So once the reports are standardized, they are accurate, they reflect what really the company activity is, they become eligible to access green finance and be able to manage those through the use of technology. And of course, the key part is we should be able to have access to that kind of technology, not only for monitoring, measuring, and reporting, but to have the renewable energy to bring the carbon levels down. So the key takeaways after all of this: sustainable finance is foundational for the future. The banks have to play their key role in helping the economy, helping the companies, and helping the organizations lead the green transition process. And to achieve that, the collaboration among the stakeholders plays a key part. And providing the right level of transparency is going to be pivotal to be able to achieve that. The calls to action for all of us: sustainable finance is key to solving our big challenge, which is the economy is heating up. No, the planet is heating up, and the economy needs to take steps globally to be able to reduce those temperatures that are going up. How we incentivize or penalize is through the financing we direct in that path. And the people who invest, all the way to individuals, they play a big role. How do we educate and engage is a key component to that aspect for us. Malaysia currently is on a good track, right track. We just need to keep pushing this forward. And collaboration between banks, regulator, and businesses becomes paramount on how we are able to move this forward, as well as what we need to do in terms of providing sustainable finance to our companies to achieve those 2050 goals we have set out. Okay, now this brings us to the end of the presentation, and let me now take questions. So let me see, there was a question asked earlier. I look at the question again, please. Hi, Gigi,
Hello, sir.
can I see the question, please? I
Hello,
thought
Okay,
someone,
sure. Anyway, if you have
CT asked
question,
me
you
a
can talk.
question.
Yes.
Yeah, okay. My question is, I want to know about CCPT. Like, if a client want to apply for a green loan, is it
Yes.
the bank will use CCPT, give a questionnaire, and how to guide using the CCPT for the.
Okay, as far as I know, okay,
Thank you.
yeah, so as far as I know, CCPT is not the only way, okay, to be able to do that. So when we do sustainability reporting, of course, you can have a climate-related portfolio. But when we do sustainability reporting and we write down in our sustainability report that we are reducing our overall net emissions from greenhouse gases, that in itself is also evident to say that how we are tracking and how we are reporting. So asset managers, they rate it as where we are in terms of green, yellow, etc., red. So there are different categories. Morningstar rates us like that. Credit rating agencies rate us like that. So yes, the climate change and principle-based taxonomy used in Malaysia that was introduced by Bank Negara is certainly a key component. I talked about that, but not the only component. Does that help answer your question, CT?
Okay, thank you.
Because I just want to make sure you recognize that it is a key component, but not the only component.
Okay, thank you.
Sure. But just a little bit more on that for others. So this was introduced by Bank Negara as a regulatory guideline for all the Malaysian banks, okay? And different banks are using it in a different way to classify lending, risk management, and reporting processes. And then when B&M comes to banks, they look at this criteria as the uh, minimum threshold for valuation of companies, the banks. Okay, any other question, please? Okay, hey, Miss, can I have the other way to sign for my attendance? Okay. Gigi, any other questions, please?
If you have questions, feel free to ask Mr. Harun so that
I'm happy to clarify, discuss. It could be a question related to something you have experienced in your career, in your organization. I am not familiar with your respective backgrounds. And as I said, I kept the presentation very high level as an intro to sustainable finance, the principles behind it, why is it important, what is the significance. So if you have anything which you would like to get deeper into it, we can talk about it.
I have another one question.
Sure, Siti.
Okay. Because it's a sustainable finance, it's about investment, and also when do a decarbonization, a company targeted to reduce their
Mhm.
carbon emission, how to convince the board on what bank can support in terms of decarbonization strategy other than solar, other than because they always talk about ROI, and then like how we can really table and relate from your carbon data to show along the line when you invest to show some ROI to the company. So it's really hard to convince the board, and it's always going back to the revenue.
It's a very good question, Siti, and I'm glad you brought it up. Just, I want to clarify one thing. Board of the bank or board of the organization that is looking to access funds? I will address both, but Siti, can you clarify which one of those two when you said it's hard to convince the board?
It's about for the company. It's about company.
Okay, excellent.
Yes.
Okay, so now the question becomes, and it's a very good question. We're talking about values, and our values have a cost that goes beyond pure mathematical calculation. So who's picking up this premium, this green premium? Who actually ends up picking that green premium? And that's why when we do an ROI calculation to say, hey, look, if we go down this route, then we end up paying a little bit extra, as I call green premium. And this is a recognized thing. That's why if you go back to the developed countries, they have allocated funds specifically to support the transitioning economies or emerging economies to have access to uh, loans which are priced on better terms, subsidized. So when those kind of financing are made available or accessible to banks, they are able to pass it on to the companies. Now let's look at this from the question that was placed. A board says, look, I don't want to spend money because the cost of becoming green far exceeds my ability to offset it against the loan that I will receive. And I don't want to go there. And it's a business decision. But at the end of the day, what regulators are trying to do, as I went back and said, incentivize or penalize, is to create an environment where businesses are motivated by A, adopting practices that encourage the usage of green, as well as they also uh, dissuade people from doing things which will let them continue on the old path. So what sustainable finance does is it makes you financing available for your projects, which are going to be helping you to move towards green projects, renewable energy projects, and bring them to a level where ROIs are justified. And the banks play a key part. If a bank is not able to do that successfully, then as Siti said, the board of a corporation will find it difficult to internally justify why they should just spend more money for a project that does not help them get their product in the market, for which no one is willing to pay a premium. And this is still a part that a lot of banks are grappling with, a lot of companies are grappling with it, that they want to achieve it, but at a price that is achievable. There is a program, Just Energy Transition Program, JTEP. Now, in this one, $15 billion are recently pledged. I believe Indonesia, Vietnam, and I forget one more country. They have committed to access that as first part of it because that money is available to those countries who want to transition away from fossil fuel to renewable energy sources. And to do that, they meaning these developed economies who are sponsoring this program, they have reached out to these countries and the banks in those countries to say you can have access to this funding, this program, provided you do certain things. And then it becomes the responsibility of the banking community and financial community to educate their clients on how they can access those funds and financing available to them. Siti, does that help clarify your question?
Yes. Yes, thank you.
Sure, you're most welcome. Uh, More questions? I can't actually, for some reason, I cannot see the questions. Let me see if I can pull it up.
Feel free to ask questions, Mr. Harun. Don't be shy. Thank you.
I believe you also, I've shared my email address. I'm happy to share any documents, reading material, presentations. Anyone needs, please feel free to ask. And whatever is publicly available, I'm happy to share with you guys. The intent and purpose of these training sessions is to bring a high-level introduction, and then for those of you who are keen to learn more, dive deeper into these principles, we can certainly help you guys achieve that. There's no charge or fee for it. Okay, there's a question for LinkedIn. Okay, that's a very good question. Gigi, do you have access to my LinkedIn?
I will
This is
share it
somebody who
here.
said, I'm sorry?
I will share here, sir.
Okay, please. Thank you.
you.
Any question about why do it at all, how we can do it better? We can even make it a discussion because we have time. I believe we have another 20 odd minutes, if I'm not mistaken. Or something that you have experienced in your own dealings where you feel that we could revisit, relook, do it better. And I do this with greatest amount of respect for all the work you guys do, but because I have not met any of you, I don't have background on what you all do, so it does help when you share. And if there are no questions, with permission from Guarantor, we can end the session sooner as well.